What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Jen and Stacey. How are you doing today, Jen and Stacey?
We're awesome. How are you?
Oh, I'm fantastic. And I've got some great news for you. You might not be aware of this, but today we are joined by my very favorite audience member. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators, investors, buyers, sellers, that sort of thing. And you might ask, why would you do that? Well, if you've ever been involved in an off-market private commercial real estate deal, also sometimes called 506B deals, you might know that you need to have documentation and you need to have a prior substantive relationship, or else the SEC will get ants in its pants. But before we get too deep into those elements of business and whatnot, Jen, Stacey, I don't know who wants to go first, but do you want to say a thing or two about yourselves before we get to your businesses?
Sure. So we've been investing for a little over 20 years, and we've done every kind of real estate along along the journey. We focus now on multifamily apartments. Actually, our suite we do both syndication and joint venture. Our
Mm-hmm.
joint venture, buy box is usually between 15 and 35 units, and then our syndication buy box is 50 plus.
Mm-hmm.
Yeah, but yeah, and we do everything remotely. We live in Florida, and our properties are all kind of all up and down the Midwest. And yeah, I don't know, we love real estate. Yay.
Great. I love it. I love it. And our first segment here is the distinct motivations. Before I get too deep into those, though, I got to say, but wait, check your eight. Ladies, I don't know if you can see through the camera and down there into the user's device, but there might be this hideous eyesore of a subscribe button, and they can get rid of it if they just, like hit it. And it's okay, it's a stupid joke, but I do it in every episode. But the 5 distinct motivations. I go through these in every episode because these deals take months. There's plenty of risks involved. What would make somebody actually follow through with these deals? And I found that even though everybody has their unique why, I found they fit pretty neatly into these 5 different categories. The first one is preservation of purchasing power. What on earth is that? Well, some people, they don't have a W-2. Instead, they have a portfolio of assets, and the way that they make ends meet is from the proceeds of ownership. So if you already don't have a W-2 and you're supporting yourself that way, why would you bother making a new acquisition? Well, there's a couple times. One is if inflation is rearing its ugly head, it's going to eat away at the purchasing power of your cash flow. And so it's going to be time to make an acquisition. But the other time is when there's an asset crash, or you can get a property when it's under heavy distress. Now, that preservation of purchasing power, that's not where I'm at. What I'm up to, because of my background in the CRM industry, just to be clear, back in 2011, I opened up my own CRM agency, and it was based on online transactions. But one of the problems I found when I fast forwarded to 2014 and eventually became the CTO of a firm in Ohio was my boss was flipping 10 houses a month. He was doing 10 transactions a month. He was making way more than I was, but I still had a higher tax burden because of the high salary, high wage earner issue. So I was like, well, how can I pivot where the reward for my effort is in the form of deployed capital, aka equity, and then it has that better tax status? So that's what I'm up to, but that's too subtle for some people, especially youngsters. And very often when they get into real estate, they're thinking really a better way of saying it is taking control of your schedule. And that might mean hustling like crazy for now and then retiring early, but it might mean that you want to work fewer months per year or fewer weeks per month or fewer hours per week or something like that. And if that's your motivation to dial back, scale back, eventually that's great. But the next group, they won't have anything like that because they're fueled by their ambition. They want to buy their entire hometown. They want to make sure that their great grandchildren never have to hold a day job. And that's why they're going to hustle into their 90s, which makes them very valuable in a GP team. But the last group, they're also going to hustle into their 90s, but it's usually because they've found a sector of society, or maybe it's the environment or animals. They want to send people to space. Who knows what it is, but if you've got some sort of pet project like that that you really want to have a lot of impact with, there's a financial component to it. And that's why some of these people are attracted to commercial real estate, is to make that social impact. So Jen, Stacey, it might be different, and you can take turns, but of those 5 different motivations, what combination of those would you say describes you best?
To help people who need it. That's mine.
Mm-hmm.
Yeah, definitely. I want to build a cash flow machine so that I can give back to the communities that we're investing in and do nonprofit, especially for children with adversity that are facing adversity. So that's why I like to do it. That's what motivates me to do it.
I love it. I love it. Stacey, have I got it right? So Jen is.
That's Jen.
I'm Jen.
Okay, cool. And you're great. Cool. All right. So then Stacey, how about you?
I mean, initially it started off with, I don't want to have to work at a job. I don't want to trade my time for money. And business is just fun to me. So it's entertaining, it's fun, it's challenging, it keeps me mentally stimulated. But when you get to a point where you've brought in all the money that you need to cover everything that you want, and you bought all the things, and you're like, okay, now what's next? And what's next is just being able to make a difference for other people. And also just to lift other people up who want to do the same thing.
I love it. I love it. And that brings me to the next question, which is the tolerance for risk assessment. If you've ever been involved in one of these off-market private 506B deals, the securities attorney in the mix, who, if there wasn't one, then that's a big red flag. But whoever the securities attorney was, they should have forced you to fill out a big invasive questionnaire of financial questions, basically to the point where whoever reads it will know more about your financial situation than you probably know about your parents' financial situation. But as I read through them, there's one question in particular that I felt it failed the task of giving really effective, usable information. And it was the question about tolerance for risk. So I've made my own one, and it's a fill in the blanks question. It is, there are many popular investment asset classes, but I think blank is too risky. I guess we'll start with Jen. Jen, what's too risky for you? It can be inside real estate, outside real estate, whatever you want.
Well, outside real estate, I'm going to go with Bitcoin, just because of a Netflix special that I saw last night. It scared the crap out of me with Centra Tech. I did not realize how legitimate these companies look or could look, or how they could position themselves. And it was a little frightening. So up until last night, Bitcoin, yeah. Up until last night, I probably would have said I wouldn't be doing single family home flipping right now.
Yeah.
But as an avid flipper who used to flip 10 to 12 houses a month, it's not that I'm against it. It's just there's a time and a place for it. But right now I'd have to go ahead and say Bitcoin, mostly because I don't know enough about it.
Yeah, I love that, especially with like the litigious threat of Airbnb possibly making a glut. But how about you, Stacey? What's too risky for you?
I'd say hotels, hotels, because we did that, and yeah, I'm all set. I don't want to do that again. It's not that it's too risky; it's just a business model that requires way too much work.
Yeah,
way too much work. And management.
Yeah, capital intensive, just gobbling up like a subscribe sandwich. Which that's my really vivid reminder that it's time for the next segment, which is where I pull out the Dan Does Deals Commercial Core Competency Cube, which is the 6 different roles in a commercial deal. And I want you to go to dandoesdeals.com right now and get your free copy of this die. And like a complete dummy, I didn't even ask for your email address. That's the cardinal sin of marketing. You never give away your freebie without getting some sort of contact information. But I want you to print this out, and I want you to get used to using these 6 different terms for the different people who are involved in a commercial deal. One is a checklist to make sure that you're not missing anything. But the bigger one is, I think if you're going to get involved in real estate or commercial real estate, it's going to hinge on your ability to communicate effectively. The added bonus of us going through this die every episode of Chance Encounters is you're also going to know how my guest fits in, and you'll be able to express it quite effectively. So let's do this. It takes 2 minutes. Repositioners, those are people who are acquisitions people. They're looking at a whole whack of different properties, and they're doing a whole whack of paperwork. What is that paperwork, you might ask? Anyway, they're underwriting the deal. That's the fancy word for it. They're doing the math. They're figuring out how do they make this business more profitable than it was in the past. And there are a few ways of doing it. Some of them are more obvious than others. One that I think is not so intuitive is the vast network of financiers. Financiers are lenders. They're people who only deal with paper and money, and they do not do any GP roles whatsoever. So the repositioners will need to know a whole bunch of financiers, because if they can secure a more advantageous loan, that goes straight to the bottom line. In other words, profitability. But the more intuitive place for a repositioner to find upside is to look at operations and stop those Benjamins from going down the toilet. Of course, there's more to operations than unclogging toilets and collecting rents and mowing lawns. Me personally, one of the things that I bring to a GP team is marketing chops, which if you're in the bigger properties, that might not sound too important. But when you recognize that vacancy is the enemy in this business, then if your property management is not able to fill those units, somebody with marketing chops needs to step in and get those units filled. So that's one thing that I offer with all my CRM background in marketing, content creation, blah, blah, blah. But the next place that the repositioner is going to look to find even more upside, because it's a competitive industry to begin with, they're going to get a contractor team involved to do a value add. In other words, they're going to renovate the units with the intention that a new resident will be happy to pay more in rent than the previous one because it's a nicer place. But you got to be really careful when it comes to paying contractors, because they might drag their heels, they might substitute the materials. You need to make sure that they stay on track. And I don't know if you're like me, or even if you know this about me, but I'm from the internet. And that means I need boots on the ground. I need a local. I need somebody who can be there in an hour or two, because you can be very certain that's not going to be me. I'd still be stuck at an airport in an hour or two. So that's just not going to fly. But when the repositioner has found an ideal property and assembled this team, they've done all these things. They turn around to the financiers and say, hey, check this out. I got this deal, 350 units. It's tens of millions of dollars. So you guys have, I don't know, say tens of millions of dollars you want to lend us? Well, the financier is going to have one other question that I haven't answered yet. And if you're in a coaching program or something like this, they tend to really gloss over this one. So pay attention. So let's do a hypothetical to explain the next one. You're a physician or an engineer or an attorney, and you decide to pool your resources to take over a new commercial property. Well, one thing you're going to need is a sponsor or KP. What's that all about? Somebody in the fold has to already own a similar asset for you to be eligible for a commercial loan. So if you're trying to take down a 350 unit apartment complex, you have to have known somebody who already owns 350 apartment unit facilities to be involved in the loan. On top of that, you need a certain amount of liquidity. You also need a balance sheet among the GP team, the ownership team, of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Jen, Stacey, you said you've been in this industry for 20 years now. So which boxes on a commercial deal are you guys most likely to check for people?
Wow. Probably finance, or I don't repositioner. We've done all of the roles. At this point, we've built our teams to the point we have our team bring us deals, so we don't have to go through all the detailed underwriting anymore. It's more about they present us with the deal, it's already underwritten, and we go and review. And then we're participating in the due diligence and then pulling the funds together. raise capital.
I think
and
that
asset
that's our
management.
biggest one is
Yeah.
we're we have a capital company, Capital Titans. We raise capital for syndicated deals.
Okay, so it's like
Not
a
only-
fund of funds model.
No, we do a co-GP model.
co-GP model.
Oh, gotcha. Okay, cool. All right, so then let's go on to the next part. I actually know that Stacey, you mentioned some of this a moment ago, which is the buy box. And when real estate people are talking to each other, say, "Hey, what's your buy box? What's your ideal property?" They mean what's easier to say yes to and more difficult to say no to. But we're really asking about three things. First one's geography. Where is it? Okay, like which state? Which county, possibly even which neighborhood. Okay, that's absolutely going to matter. The second one that's going to matter is the size. And most of my guests here on Chance Encounter, they're in multifamily, and the way that you define size in multifamily is by unit count. It's important because you're going to have a completely different kind of group taking over 15 unit apartment complexes compared to the 150 or the 350 unit apartment complexes. So that size definitely matters. But the third one, I have started to call it desirability. A lot of people call it class, but the thing I don't like about the term class is because then you're stuck using two things, using the word for two different meanings. Those two different meanings are the condition of the building and the area that the building is located in. So when we're talking about condition, we're talking about how old is the building, how beat up is the building, what about the luxuries and amenities? Is it really bare bones or is it really, really fancy and nice? That's the condition. But the area, you've certainly heard the saying, location, location, location in real estate. What they really mean is traffic, traffic, traffic. Desirability is about like there's a whole gazillion people who are passing by that property on any given day. It's going to be more desirable. But when you're talking about the area, you're talking about the crime rate where the property is located, the school districts where the property is located, and of course that other feature. But both the area and the condition are ranked the same way as in grade school, where you got A plus at the top and then A and then A minus and B plus and so on. So Jen, Stacey, as far as your buy box goes, what's easier to say yes to and more difficult to say no to?
I mean, are you talking class or are you talking unit size or both?
Oh yeah, the whole gamut. So I want like which states or counties are just like, it's like, oh yeah, I need to be in on your deal. And then, the also like class and those different details. So what's the full buy box for you guys? What's really easy to say yes to?
Generally speaking, I'm going to say the Midwest because we're really in a lot of different markets in the Midwest. So we're always open to like, let's check out the market and see. As far as units, I mean, we've done everything up to 420 units. From a purchasing standpoint, it's a lot more difficult to take on the bigger deals right now because raising capital is more difficult when people are scared. So, we've always done both, not always done both, but we syndicate now, but we also do joint venture deals that are smaller. Those are easier to take down right now because you don't have to raise so much capital. You can raise it from, one or two people that are partners in the deal. So our favorite size is probably in the 15 to 35 range right now, which is easy, but we just did a 48 unit. That was a syndication a couple weeks ago that we closed on, and 96 units earlier this year, but they all had, sub $3 million raises, which is a lot easier than trying to go into a $15 million raise right now. So class wise, probably B, C plus to B, like to go in and improve, obviously like value add, but right now our primary thing that we will not do, we will not buy anything that's not already cash flowing on day one, which is a deviation from how we've operated in the past. But as soon as interest rates started going up, we immediately shifted our strategy. It's got to have some value add, but it can't be only value add because there's too much uncertainty in cap rates and prices and things like that. So that's where we're at. We like stabilized deals that have some upside, value add upside in Midwest markets.
I love it. I love it. Then my next question has to do with people. And I got to say, the best thing about commercial real estate is, unlike some industries, people are so helpful and nice. And it seems like, like why is that? But the reason is because it's faceted. There's so many different roles in a commercial real estate deal. You're always eager to put new teams together, give different recommendations so that you get what you need in the future as well. But at the same time, we all have our own unique skill sets. So we're better off helping some people more than others. Me personally, because of my online funnel background and compliance and all that kind of wonderful wonderful stuff. I'm always eager to speak to more sponsors and KPs, and that's just simply because they already have the foundation where somebody like me makes sense. I'm not the kind of person like one of the grunts where, they can realistically put in 80 hours a week. I'm the type of person who sets up the digital systems that tend to, well, I've put a few people out of work before for that. But the other one is locals as well, so those are the two people who can benefit most from my programming and IT and all that kind of fun stuff. But Jen, Stacey, who's out there that you can help the most? And if you have any 506B deals, don't mention them specifically, because that's the SEC will get ants in its pants.
Yeah, they definitely get ants in their pants for sure.
I mean, the way that we generally help people is two-way. When people are trying to be active investors, we have an academy, and we basically help them get into their first deal, educate them along the way, and then teach them how to stair step and eventually get into syndication. We always teach them, start with JV. You're all day long, you're going to close 1,000 times faster. If you start with something small, you're going to learn 80% of what you need to know by just doing that. And then you can stair step from there. For our passive investors, although we just raised for a couple 506Bs, we are now transitioning where we will only do 506C, just because we have such a large online presence with our academy and everything else that we don't want to have any blurred lines. So we will be able to help accredited investors invest in good solid deals. That's how we help people.
All right, beautiful. I love it. And then when it comes to how to reach out, I'm pretty fortunate because I have this pretty distinctive last name. And of course, if you use your phone to scan this QR code right there, that brings you to the FAQs page of 506BME, which is the platform where I offer the service of documenting your substantive relations for your different syndications. The whole idea being that if you get audited by the SEC, the thing they're going to look for is you need to show that you knew the person's appetite for risk, core competencies that apply to the deal, and that sort of thing. And it has to be able to survive if you drop your laptop into the bathtub. But if people want to reach out to you, Jen, Stacey, is it through a social media platform? Is it email, website? Where should people go?
The best place is to go to warriorsofwealth.com. That's the best place.
Okay, good stuff. And then that brings the last thing. It's actually the public service announcement part. So it's not for you two, it's for you and the audience. If you've been watching this episode and you've been experiencing searing pains in your eyeballs, migraine symptoms, I'm confident it's the hideous subscribe button that's down there. And if you hit it, it'll go away. It doesn't cost you anything. And I'm biased. I want a bunch of people to click on it, because then YouTube will start to pay for these videos instead of me. And I think that would be amazing. And as I said, it doesn't cost you anything. The real trade-off to you, just full disclosure, is that my videos may show up on your list of suggestions. But quite frankly, you can go ahead and ignore those suggestions. I just appreciate the fact that you spent this time with me. Just like Jen and Stacey, I appreciate you joining me today. This has been great.
Thanks for having us.
Thank you, Dan.
Awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.